Hey everyone, welcome to the KE Report and a daily editorial on today, Tuesday, June 17th, chatting with Jim Tassoni. Jim is the CEO of Armor Wealth Strategies. We chat with Jim every month or so to get his updates, his thoughts on the markets, what he is trading. Jim is an active trader focused mostly on momentum. So we like to follow up with Jim to really get his thoughts on what markets have momentum and which ones don't. So the good and the bad out there. Jim, I want to start with the silver market. We talk precious metals a lot, and gold was really the standout for the last few years, and silver has been, in a way, kind of lagging, but also still with a nice upward trend to it. Recently, silver has started to outperform gold, and even more importantly, has jumped above some pretty significant multi-year resistance levels. Jim, what's your thought on silver? How much more upside is there in this silver trade?
Yeah, hey Corey, good to be on again. So we definitely flagged this as you mentioned, you could probably expect that at some point we would participate in this rally being more of momentum traders. With that being said, I mean we saw that low back around Liberation Day. We got down on the continuous contract down to about 27.55, 27.54 on the silver futures. And then we started trading higher. And I wish we could say that we got involved way down there. Unfortunately, we didn't. We trade both the ETF and the futures. On the futures trade, we didn't get long in that until we broke above 33 spot 25. And so we thought, and we talked about it off air a little bit, 35 was definitely a point that we were a little bit nervous about, 35.90 specifically. We finally got above that and saw some sustained momentum. Now we're trading up here, well above that. We've sort of moved our stop up to that 35.90 area. So we're gonna take a profit on this trade. It's been a pretty good trade. I don't see any reason why we couldn't make a run here now that we've sort of breaking above levels again above this 37 area, that we couldn't make a run at, 39, $40. It's definitely realistic and in the cards, but again, we'll play the momentum. We're not big at trying to target upside. We're just more traders that like to get in when the momentum's cooking, raise our stops and allow the trend to take us where it'll take us.
Well, Jim, it sounds like it was still a good trade for you guys. So hats off to your team for identifying it and getting in, and then you're looking at that 35.90 as resistance. Now the silver equities have also responded. Are you playing something like SIL, SILJ, or any individual silver equities?
So we did actually put a trade on in SIL as well, and this one's been pretty decent for us too. Again, we noticed a breakout above sort of the 42.35 area in SIL, and we got long there, and it's been a pretty good trade again. Now trading up here at almost $49 as we speak. We've raised our stops again to 44.50, so we've locked in profit here, and we're going to see where this goes. I mean, could this be silver's time to play catch up to the gold trade? I'm not one that's smart enough to predict that, but at the very least, I don't mind participating if it is.
Jim, what else do you look at on something like the SIL chart where SIL has really taken off? You look at the monthly, weekly, even daily chart, it's well above any moving averages. It's hugging the upper Bollinger Band. The Bollinger Bands continue to widen. Even the RSI getting into some overbought levels. All of this is very bull market action, but what catches your eye more so, or what other indicators do you look at in something like an SIL chart?
Yeah, I mean we're big volume area and point of control traders. We tend to look at where volume's trading, where resistance points are, and where support points are. And our main strategy is we want to buy when we break above what was previous resistance. We don't get real complicated. We don't have a million indicators on our charts. We keep it pretty simple. If we can break above what we consider to be a previous resistance point and show some sustained momentum above that, a daily close, a couple of daily closes, depending on the market. That's all the indicator we need. And then we know where our support levels are. We'll put that stop in and we'll see how the trade goes. Manage the risk and hope for the best. I mean, I think if anyone's being honest in these markets, that's about the best you can do.
Well, Jim, since we talked about silver so much, maybe just a quick comment on gold too. It's kind of gotten stalled out here. It may not be in as much momentum, but how are you looking at the yellow metal?
Yeah, so we again, this is another one that's been a little bit more difficult to trade than silver over the past few weeks. We obviously participated long for a while this year, and that's been one of our better trades is several different long gold trades, especially early in the year. We did try actually to short gold back middle of last month, kind of right after our last call. Trade didn't work out great. We ended up sort of scratching that trade. And now we have initiated another long. We got long into this market at 34.06 last Friday. And so we're holding that position as we speak with the stop down at 33.36. So that's sort of the trade we're in right now. We think there's some momentum picking back up in it. We broke above, like we said, a resistance level, but now we're trading back below it. So the momentum is definitely stalling here. I think you could be in a more of a range bound trade in gold. I don't necessarily know if we're going to see, that explosive upside like we've seen the last week or two in silver.
So what's that range that you're targeting? Is it as simple as that 3,500 down to about that 31 and change, those recent levels that we've seen in the last few months?
Yeah, I think, we're looking at on the low end, yeah, 31.20, 31.23 in there. And then, like you said, that high end, we're hoping if we continue to stall, we got to get above 34.76 is an area that we really want to see this gold market get above and have a daily close above. If we can get that 34.76 close and maybe sustain that for a couple days, maybe we set up a move back up to 35 and then maybe 3600. But the first level to clear on a daily close for us is that 34.76.
Okay, Jim, appreciate that target, and we'll be watching. Hopefully, we see that move, but we'll keep our fingers crossed here as far as the precious metals. Nice to see the move in silver, though. If we rotate over to the general equity markets in the U.S., we were noting off mic just how resilient they've been, really in the face of all kinds of different things, whether it's geopolitics, whether it's trade concerns. There's just a lot of things going on in the currency markets, and it seems to have all been shrugged off by the markets. They continue to blast higher. How are you playing the U.S. equity markets, Jim?
Yeah, gosh, I definitely was really good at this early in the year and then really bad at it. And I got too bearish, and let this be a lesson for all investors and traders out there. I got too involved in the negative headlines, if I'm being honest, and I try to be as systematic as possible, but I'm still human. I started to look for a lot more bearish setups than bullish setups. And I looked really great until April 9th, and then I just got ran over. And I kept looking for areas of resistance to short into, and I kept taking small loss after small loss after small loss until finally, I did finally capitulate around the end of this month, 1st of June, and just said, you know what? This is a fool's errand. It's hard to fight this market. Why am I fighting momentum? My best trades are when I go with the trend. And so we got long on the futures, and I'll quote the continuous because we just rolled over here at about 58.98, so right around 5900. If you're more of a ETF trader on the SPY, right around 590 in the SPY. And so we're profitable on this trade. Haven't traded it well the last couple months, but riding this momentum for now. It's very difficult to be a bear in the equity markets because no matter what's thrown at this market, it takes it in stride, maybe has a little hiccup, and then just resumes that climb. So hard market to fight.
Yeah, it's been the most impressive thing recently is what caused volatility earlier on this year, all the tariff fears and ongoing wars. They don't seem to have the same impact right now. Also known as that taco trade, though, isn't it? The new buy the dip terminology. Jim, what about the small caps, though? We've also heard that small caps, such as the IWM, have done pretty well. Is there a sweet spot within these broad averages, certain sectors that are outperforming in your eyes?
Yeah, I mean we've been somewhat more constructive on small caps than we've been in a long time again, but I will say the last few days, and we tend to be a 1 to 3 month trader, so we're a little bit shorter time frame, but not day trading. The last few days we've started to see momentum wane a little bit in this small cap stock. We haven't been in small cap stocks, namely the IWM. We haven't been big proponents of small caps for years. And I've said it's a very difficult index to invest in because you've got an index that 40% of which is unprofitable companies. I have a hard time putting my money into anything where almost half of it's going into companies that don't make money. It just doesn't make sense to me. So, been somewhat negative, have steered away, definitely been more towards the large cap space. And it's overall been the right call over the last handful of years and even this year so far. We saw this again, like everything else, perk up off of Liberation Day, but now we're starting to see a fade in momentum, and we're watching. We are long, albeit about half the size long in small caps as we are in large caps. We are currently long, I would call it a half size position. 208.50 for us on IWM is the area to watch. A close below 208.50 and we would exit this position and stay on the sidelines. We wouldn't short right now. This is not an area that we'd be real excited about shorting, but we don't want to be involved in this trade if we can't hold above 208.50.
Well, shifting over from U.S. equities, whether the large caps or the small caps, over to another big market, the bond market, Jim. I know you always have a thought on it. We're seeing rates down today as we speak, but what's your overall view of the trend in the bond market?
Yeah, we continue to be more favorable of staying short on the curve. We actually, in this environment, if we had to choose between spread products and treasuries, we would probably lean more towards spread products, to be honest. We don't like long-term treasuries. We haven't since the Fed cut rates last September. We've been overall really right on that call. It's one of the few shorts that we actually have on in our portfolio right now is short the TLT. So we are short that. We're long the 7 to 10 and the 1 to 3. So we're long the shorter end and the I guess I would call it belly of the curve against a short on the longer side. If you're not a shorting type investor, if you don't want to do that, our advice in the bond market would be to stay short in duration, especially if you're a treasury investor.
What about the US dollar too? We've been talking a lot about the US dollar and it's threatening or arguably even breaking down. But look, it's still close to 100 is still historically decent for the dollar, but compared to where it has been in the last few years, it's kind of weak. It is rebounding today, but again, it's still under 100. It's mid 98 range. So is the dollar in for some lower levels?
Yeah, this is another one, and it's not, we've got our largest and pretty much only short besides TLT is we've been short the US dollar for a while now. And this is a trade that, again, we've been right on, we've made money on, we've got profits locked in on. We're seeing a dollar now that is going, in our opinion, is going to do one of two things, and we'll let the markets tell us because again, we're not smart enough to predict these kind of things. It's either basing here and we're going to at least see a stabilization, if not a slight move higher, or we're going to see a breakdown to new lows and a continued move lower. Now, we've seen us bouncing around this area, kind of probing these lows down here for the last week or so. And it remains to be seen if we're going to be able to truly get some momentum flush lower. Right now, we still remain short this. Like I said, the long bonds via the TLT and then the dollar are pretty much our only two shorts in our book right now. And we'll hold this position until the market tells us otherwise.
Well, Jim, one other market we got to get you to weigh in on is the energy space. We've seen oil claw its way higher and higher. Some of that's geopolitical, but some of that was technical. You've had a pretty good trade in the oil space, so maybe break down what you're seeing there and if you have a thought on nat gas.
Yeah, we got pretty lucky in this oil market. Now, I preface we as traders got lucky. There's nothing exciting or lucky about the reasons for this oil spike. I mean, the war over in the Middle East is horrible. We're not ever fans of that, but we saw a breakout above sort of this 63.90-ish area back early last week, and that was sort of a signal to us to get long, and then we just sort of exploded higher. Well, now we've come back, checked back some of those gains, and we really see maybe a range setting up in crude between sort of this 65 level and about 73.50. So sort of a $8.50 range. We think we could settle in there and be a little bit more range bound as things settle out and we try to figure out exactly what's going to go on in this market and what's going to go on geopolitically. Now, we do have a stop in on our trade at 69.10. So we've had a nice profit on this trade already. This is one of our better, short-term 5, 7 day trades that we've had all year. And so we're very happy with the trade, just not altogether happy with the reasons for the success.
Fair enough, Jim. Jim, do you find when you're taking positions right now with, it sounds like playing the long side on a wide range of markets, you taking smaller positions? Are you getting more aggressive? What type of trading do you find you're doing right now?
Yeah, I mean, a lot of our trading is based on sort of the volatility of what we'll call our value areas. And so, if there's a ton of volatility in the markets, we'll tend to take smaller positions. If the ranges are a little tighter and our stops therefore are tighter, we'll tend to take larger positions. All in all, though, I would say, this is the longest we've been overall, and maybe these are famous last words, probably all year at this point. And I know that's somewhat contrarian, especially on the equity side, but we're just not seeing anything that would indicate to us right now that there's a correction or a crash that's imminent or that we're headed into some terrible market. Now, anything can happen geopolitically that could change that thesis. I mean, we know the type of markets we're in and the type of tape bombs we could walk into, but just the data that we're looking at right now, we think there's no reason. And again, have your plan. I talk about it all the time. Have your plan, know where your outs are. But right now, we just don't see any reason why you shouldn't be, fully engaged and fully invested on the long side, especially in the equity markets.
Well, Jim, this brings up an interesting point. I just wanted to ask you about it. As a momentum trader, how do you know? I guess you don't really never know, but how do you go about what's your strategy for when to sell? Because I think a lot of people can embrace a pullback and buying low, but they seem to struggle a lot more with when to sell, and it's more of an art than a science. But how do you approach when to sell a position?
Yeah, I mean, we're fortunate enough that we turn it into I guess I would call it a science for lack of a better word. I mean, we have our indicators that we've developed, our value areas, and they populate on our charts. And so we know we're trailing stops and we try to be slaves to those levels. And we know, hey, if we get a close below this level or if we hit this stop that we have in place, that's where we're getting out. And then we reassess at that point. We're not ever we early in my career, let me put it this way, I tried to be a hero trader. I tried to be the guy that's going to call the tops or call the bottoms. And all I ended up doing was hurting myself. So after doing this for 20 plus years, I just let the trend take me where it's going to take me. I know where I'm going to get out if I'm wrong, and I sleep really well at night trading that way.
All right. Jim, thank you, as always, for really looking at a wide range of markets for us and sharing your outlook. Right now, yeah, it's a bull market, clearly, for a lot of different sectors. Just interesting to see, again, everyone still kind of a bit nervous with these markets, but isn't that what bull markets do, is climb a wall of worry? Plus, we just never know where the volatility or when the volatility is going to come because of either an individual tweet or some escalation of war, which unfortunately seems to come fairly regularly these days. Again, Jim Tassoni, CEO of Armor Wealth Strategies. Click the link in the show notes to follow along with Jim and his trades. Jim, thanks for your time. We'll chat with you next month.
Thanks, Corey.